Dirty dealings, corporate battles, consumer woes. This is Evening 5. A corporate development is brewing at Public Bank, according to sources, with the country's third largest banking group by assets believed to be undertaking a potential acquisition of a related company. Industry sources are saying that the development may be in relation to LPI Capital. Main market listed LPI wholly owns Lompak Insurance, a leading general insurance provider. LPI's latest annual report shows that as at January 24th, Consolidated Teh Holdings, or CTH, held a 42.74% stake in the insurer. CTH is the private investment vehicle of the late Tan Sri Teh Hong Piao, founder of Public Bank. Teh passed away in December 2022. Teh had also held a direct 1.31% stake in LPI. Based on LPI's share price of 12 ringgit 80 as at time of writing, CTH's stake in the insurer was worth 2.18 billion ringgit. LPI's other major shareholder is Sampo Japan Insurance with a 7.76% stake. Public Bank is expected to hold a press conference on Friday morning, according to a media invitation. The bank's managing director and CEO Tan Sri Teh Alek and a few key stakeholders will be sharing important updates and information related to a major announcement. Public Bank's biggest shareholder is CTH with the direct holding of 21.64% based on the bank's latest annual report that cited shareholding data as at February 29th. Lompak is LPI's operational arm for the group's insurance activities in Malaysia and Singapore. In Cambodia, LPI has a 45% stake in Kampu Lompak Insurance. For the first half ended June 30th, 2024, its net profit came in 31% higher to 179.3 million ringgit. In the notes accompanying its financial statements, LPI said the government's boosted spending in the semiconductor industry, building manufacturing capabilities and expanding public infrastructure are expected to increase demand for insurance services in the coming quarters. The World Bank has raised its forecast for Malaysia's economic growth for 2024 to 4.9% in April 2024, following the country's stronger than anticipated performance in the first half that reflected robust growth in consumption, investment and trade activity. As an open trading economy, Malaysia is benefiting from the upcycle in global economic growth, which is expected to stabilize around 2.6% this year, despite ongoing geopolitical tensions and high interest rates, according to World Bank's lead economist from Malaysia, Dr. Apurva Sanghi. During a press briefing for the World Bank's Malaysia's Economic Monitor October 2024 report, he said that overall the Malaysian economy is in a good place. He elaborated that the second quarter growth of 5.9% exceeded expectations, while inflation continues to be moderate, and both approved foreign direct investments and domestic investments are on an uptick. Domestically, Malaysia's own political stability and an increasingly conducive positive environment are among factors that have contributed to the country's strong economic growth, which has boosted investors' confidence and mobilized more investments in the country. The World Bank's forecast is within the higher end of Malaysia's official projection of a gross domestic product growth of between 4 and 5% in 2024, followed a 3.7% expansion in 2023. Based on its assumption of USD MYR exchange rate of 4.54 and an average annual growth rate of 4.3%, the World Bank anticipates Malaysia to reach high-income nation status by 2028, which is within its previous 2021 projection that it would happen between 2024 and 2028. While Malaysia's key labour market indicators have improved, Apurva highlighted that skill-related underemployment, reflected in individuals with tertiary education working in semi-skilled or low-skilled jobs, has grown significantly over time. According to Apurva, the underlying reason for the high and rising SRU rate in Malaysia is the insufficient number of high-skilled jobs that are being created for tertiary educated workers. Ireka Corp has secured subcontract works for the Sabah Pan-Borneo Highway Project Phase 1B, a project worth 1.07 billion ringgit. Ireka's wholly owned subsidiary, Ireka Construction, accepted the letter of award from Gamalite. In a filing with Bursa Malaysia, Ireka said the subcontract is for upgrading works to the road from Kampung Lumur Baru to Kampung Tupus, which will be for a period of 48 months from September 30th. The construction group said the contract will enhance its existing order book and is expected to provide provide a steady stream of revenue and income to the group over the next 4 years. Ireka, which is currently classified as an affected Practice Note 17 user, said the project is expected to contribute positively to the net assets and earnings per share of the group for the financial year ending June 30th, 2025 and onwards until the completion of the project. Group Managing Director Datuk Muhammad Hasnul Isma Muhammad Ismail said that the contract not only underscores its commitment to contributing to the nation's infrastructure, but also represents an important step in its journey of growth and expansion. Media Prima has clarified that Tan Sri Syed Mokhtar Al-Bukhari remains as a substantial shareholder of the media group. This comes after Aurora Mulya's confirmation in a letter that it still holds a direct interest of 353.82 million shares, representing 31.9% of Media Prima, and Syed Mokhtar continues to hold his substantial shareholding in the company via AMSB, said Media Prima. Media Prima emphasized that this clarification is intended to ensure complete transparency and address any potential misinterpretations arising from the company's announcement to Bursa Malaysia on October 7th. To recap, Media Prima via its boss filing showed that Sutra Bhakti, Tradewinds Group Malaysia and Restu Journey, indirect substantial shareholders of the company via AMSB, have ceased being substantial shareholders in Media Prima following the disposal of 353.82 million shares. AMSB emerged as a substantial shareholder in Media Prima when it acquired the 31.9% stake in October 2019 by taking over the interests of UMNO through Gabungan Kasturi and Altima. Media Prima publishes the news Straits Times, Berita Harian and Harian Metro and owns television channels TV3, 8TV, NTV7 and TV9. Innovation Network Corp of Japan is reviving the sale of its 21% stake in telecommunications tower company Edotco Group, reported Bloomberg, citing people with knowledge of the matter. The Tokyo-based investment firm is expected to start the process to sell its stake this quarter, the People said, asking not to be identified, discussing private information. INCJ has contacted prospective investors, including private equity firms and family offices, to gauge interest, the People said. Meanwhile, Edotco is revising plans for an initial public offering in Kuala Lumpur as soon as 2026, the People said. Discussions are ongoing and the plans may change, the People said. Representatives of INCJ and Edotco declined to comment. Founded in 2012, Edotco manages over 58,000 telecommunication towers in Asia, including in Malaysia, Indonesia, Pakistan and the Philippines, its website shows. Axiata Group owns 62.4% of Edotco. Axiata and INCJ, as well as Sovereign Wealth Fund Khazanah Nasional and Retirement Fund Inc. or QUAP, explored selling a majority stake in Edotco last year, but that fell through due to disagreements on valuation. INCJ needs to unload its holding by the end of March when its mandate to operate ends. It invested $400 million or 1.72 billion ringgit in Edotco about 7 years ago.